It's the Market Day Report. I'm John Jenkinson. Thank you very much for spending part of your day with us, both on RFD TV as well as Channel 147, Sirius XM Rural Radio. All right, we've got that USDA report headed our way here in less than an hour. First, let's run through the numbers, and we start with the corn market here today. A lot of folks keeping a very sharp eye on the corn acres and what this may mean. Right now, December new crop corn down 4.5, 353. July corn also down 4.5. November soybeans up 3/4, 950 3/4. It's December Chicago wheat unchanged, 434 3/4. December Kansas City wheat down 1/4, 434.5. And over to the Minneapolis wheat market, it's December up 1 3/4 at 644, with December cotton down 86 at 71.25. And Brian Hoops with Midwest Market Solutions is here with us to talk about this USDA report. Which way is the trade leaning, do you think, Brian?
Well, going into this report, I don't think the USDA is going to make much of a way of major changes. We've got harvest just around the corner in a lot of areas. I think the USDA is going to be real conservative on making some major changes in here. So I'm looking for them to keep yields for both corn and soybeans virtually unchanged from the last report. I do expect that we will see very little activity going forward in here. A lot of the trade just expecting that we'll see lackluster activity, I think.
Well, you got to wonder how much of this was already built into the market, and no change might just leave this market just flat for the time being, and no direction, because the fundamentals. Do we really have a story here to push one way or the other?
At this time, we're going to have a change in the fundamentals. The USDA is saying we have a big crop, and history tells us that it gets bigger. But once we get into the harvest, that's when we'll actually see some harvest data, and that may change things significantly. As we look at this report, USDA likely to leave things virtually unchanged. If they would come in with a surprise, it could be to the bullish side of things. They've already dialed in some big yields with dry weather in the last half of August and early September. I think it's very possible they could reduce those yields in the future reports or going forward in here. So, we've got a time frame of the year where the funds who typically want to get long in the fourth quarter. That's just around another couple of weeks here. So they're right now they're short in corn, soybeans, and wheat. And by that fourth quarter, that's when they usually like to start building in a long position or a net long position. So I'd expect that they will use some weakness in the last half of September to try and buy back some of those short positions.
Well, Brian, the outside markets also are going to influence how much that fund money comes back to the market, won't it?
Absolutely. Crude oil's been pretty strong in here, and traders certainly watching what the dollar's been doing. We had last couple of days, we've seen a rally in the U.S. dollar, but we've recently moved to new lows and testing some major long-term support. That should be a supportive feature as well. Stock market's been at all-time record highs. If some money comes out of that stock market, it's likely to move back over into commodities.
Well, it's certainly going to be interesting, and I know a lot of folks are going to be anticipating that next world supply and demand estimates out in another month because of those inclusion of numbers and because of more surveys out there. So that'll continue to be watched. Anything else about this market that you're concerned about as we get ready for the report?
The big thing, I think, is to look at the yield, what the USDA says. At the end of the month, we'll have small grains report. That could be a positive report, especially for spring wheat. Right now, they're harvesting in Canada. They're about 1/3 done with their harvest in some of the major provinces there. And once we get to a half to 2/3 done, that should be in another couple of weeks, and that should be where we find maybe a bottom in this wheat market. It's been kind of a laggard here over the last 3-4 weeks, but there may be better opportunities for wheat producers to make sales on another rally attempt. So I think that's something to look at very closely if you're trying to decide whether you should store this crop or do some marketing now. There may be better opportunities if you have that ability to store the crop down the road.
All right, Brian Hoops with Midwest Market Solutions here with us. Don't go anywhere, Brian. We'll talk livestock coming up next here on the Market Day Report right after this. Brian Hoops is here with us with Midwest Market Solutions. And Brian, it's time to talk a little bit about this livestock trade. The futures are just kind of drifting here a little bit this morning. And at one point, I thought maybe that this week's cash would kind of take its cues from the futures. But we see the live cattle now dropping anywhere from 20 to 50 cents. Depends on how far out you go. Or could we do steady cash money this week, do you think, if the futures will just maintain?
It's certainly a possibility. The show list numbers are a little bit larger than last week because we did carry a few head over into this week's show list. So I'm looking for steady to lower cash trade this week. If you look at that structure, you just put the future prices up there. Producers take a step back and look at those prices. You can see this is a bearish setup for the market, as it's telling producers to put more weight on their cattle, hold out for another month or 2 months even, and you'll get a better pricing opportunity if you wait till December to market your cattle, or wait till February, or wait till April. That is bearish because it encourages producers to add more supply to the market. We're going to have a huge production increase already here in the fourth quarter coming up, when we have more numbers. About 500,000 more head is coming to market, and we're starting to add weights to those cattle. Another 3 pounds last week in the weekly slaughter numbers, and when you see that type of environment, it encourages producers to add more weights. That produces more tonnage, and it puts more strain on demand. And we're hearing some more talk about lackluster demand. McDonald's stock is down, anticipating that sales of McDonald's is going to be hurt because of the hurricanes. Imagine what that's going to do to restaurant and higher quality end cuts of beef. It's going to hurt that demand as well. And I think we're going to see demand starting to falter, so we have to have a bearish outlook for our producers going into the fourth quarter for October and December cattle.
All right, Brian Hoops here with us with Midwest Market Solutions. Brian, thank you so much. Have a good rest of the afternoon.
Thank you. Take care. All
right, thank you very much. Let's look at that live cattle contract, or those live cattle futures anyway. And to get into these numbers here before we go to the break, it's October live cattle down 15, 107.05. December live cattle down 43, 112.45. February live cattle down 55 at 116. We still don't have any really firm bids or asking prices out so far. On to the feeder cattle futures. September down 25, 148.20. October feeder cattle down 13, 149.22. November feeders down 2 at 149.28. To the hog trade we go. In October, lean hogs down $1.18, 60.40. We're going to get closer to that $60 threshold there. December hogs down 88 at 57.75. February hogs down 46 now at 63.22, and April hogs down 40 at 68.28. So the hog futures here are just a little bit weaker today, and might send a weaker signal to the cash hog trade. And we'll get an update on that here in a little bit also. So.
Okay, we'll keep watching it. Thank you so much. Markets editor John Jenkinson.